What's up everyone, it's Scotty with MoneyVest. In today's video, we are going to be talking about inflation expectations because tomorrow is the big day. We've got inflation numbers coming out for the month of January in the United States. So I'm going to break down everything you need to know prior to the inflation numbers and also the market's expected reaction going into this inflation print. As always, if you enjoy this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Links to our Discord and Patreon is going to be down below if you're interested in joining us and of course getting access to all the members only private videos. So this right here is going to be our Patreon and Discord 40 plus private member videos along with 20 plus Discord channels, including trade alerts, buy and sell alerts, options alerts, trade ideas. Everything's going to be included. And also, this is the most recent video I posted with 12 stocks that I'm planning to buy with my specific buy targets. And also, do connect and follow me on Instagram. My handle is going to be CASWRP. Would love to connect with you there also. So when it comes to inflation, so slower U.S. inflation is set to fuel Fed cut optimism. Now, why is this a very, very critical report for the United States? The reason being is because the Federal Reserve, which is run by Jerome Powell, he's the chairman and the Federal Reserve head, is primarily focused on bringing core inflation down to 2%. That's their target. And the last 6 months, they've seen a lot of progress. They've seen a lot of great data. And Jerome Powell specifically mentioned that we want to continue to see more good data. In other words, we want to see greater confidence. We want to have greater confidence that inflation is indeed moving closer to our 2% target. However, I would argue that more recently, though, it's been more or less stabilized, meaning that it's not really accelerating downward pretty aggressively, but it's more or less stagnating to the sideways with some mild pullbacks and disinflation in some categories, which we will also discuss. So, of course, there's going to be some optimism around Fed rate cuts, and the Jerome Powell and all the FOMC members are going to be strictly focusing on that. And the consensus going into tomorrow, again, tomorrow at 8:30 a.m. Eastern is when the inflation numbers come out. I will be live to cover the entire report here. And the CPI month over month expected at 0.2%. Year over year at 3%. That's going to be down from 3.4. That's a huge improvement. And ex-food and energy, which is exactly what the Federal Reserve focuses on, core inflation, 0.3% month over month, and year over year at 3.7%. That's the expectation, and that's going to be down from 3.9% as well. So that is basically the consensus expectations for month over month and year over year inflation numbers. And again, the market's reaction is not that difficult to understand. If we get better than expected numbers here, the markets are most likely going to rip higher in that optimism that inflation is indeed moving lower, while also unemployment and economic growth continues to be very strong. If there is a hotter than expected print, meaning month over month we see a 0.3% or higher, year over year we're sitting at 3.1 or higher, worse yet 3.4% or higher, and core inflation is going to be at 3.9 or accelerates back up to 4%. That is absolutely the worst case scenario from the market. For the market, because of course that's going to reiterate the idea that inflation is going to take a little bit longer to come down. It's not going to be an easy journey for the Federal Reserve to bring inflation down to 2%. So bottom line is consensus beat. That's a possibility for markets to react positively. If you do see a miss on expectations, if you get a hotter than expected print, then the market's reaction could, of course, be very negative. Now, in December, 0.3% month over month increase, and this is where we are. This is exactly what I'm talking about with respect to overall headline inflation, which hasn't really gone anywhere since June of last year. So if you take a real look of where we are at the moment, this right here is June of 2023. This is December of 2023. And for those 6 months, what you will basically notice is that all inflation, so overall CPI, overall inflation, has just been between the 3 to 4% range, right? So it's just been kind of hovering around 3 to 4%. It's just gone up, sideways, gone down, a little bit sideways. So it's basically been in that range for the most part. Now, core inflation, on the other hand, which is all items as food and energy, have obviously been coming down. But again, at the same time, you'll notice more recently, it's just been stabilizing a little bit. It's been moving sideways at the moment, and that's exactly the main concern, is that are we going to see that acceleration downwards, or are we going to see, again, inflation stagnate a little bit sideways and not really come down to the Fed's target? Because if it doesn't, the Federal Reserve is going to have to rethink their strategy from a monetary policy standpoint. And do they really want to cut rates middle of this year? Because there is somewhat of a unanimous decision happening at the time because almost all members are on board with some type of rate cuts in 2024. But if inflation doesn't come down fast enough, or worse yet, it starts to reaccelerate, that's going to be a big problem for the Federal Reserve, for monetary policy, and of course for the US economy and the markets as well. Now, moving over to the actual numbers, Energy is doing its part. We continue to see a lot of deflation in energy. So, down 2%, 3%, 14%, 13% on a year-over-year basis. So that's really good. Food is still up 3 to 5% on a year-over-year basis, and then we continue to see, apparel prices, used cars are still down, but medical care prices, apparel prices, and then of course we got shelter being the big culprit of why inflation is still a little bit more elevated. Transportation services up over 9.7% year-over-year. So all those things continue to put a little bit of pressure on overall inflation, especially shelter, which is still yet to come down. Rents are still elevated. And this right here for the month of January, we had energy prices, crude oil, more specifically up about 6%. And that was also the case if you come over. The last 3 months have been very strong and they've been coming down. So you'll notice that energy prices, we did see again declines. September, however, was a month where energy was up 2.3%, 2.1%, and fuel oil was up 8.5% respectively. Because if you come back, this right here was September, which was obviously very strong for energy as well. And even prior months, you'll notice fuel oil and crude was up because energy prices were indeed up. So you see this block here of green candles. That definitely represents a lot of momentum upside. And this right here in January, once again, we have energy prices going back up. So that, of course, could potentially lead for energy to move back higher. But a lot of that's going to depend again on food and shelter, whether they can kind of come down to bring inflation somewhat lower. That's kind of in line with the consensus expectations. Now, this right here is what the market's pricing in. So 1, 2, 3, 4, 5, 6 rate cuts priced in, with the beginning happening in May of 2024. And again, I think 6 or 7 rate cuts is still a little too much in my expectation because the markets are very, very optimistic. But the idea here is that in 2024, the market's now only pricing in for 1, 2, 3, and 4, and possibly 5. So 5 rate cuts are being priced in 2024. The Federal Reserve has told us 3. So markets have now pushed one rate cut in 2025. So that's going to be down to 3.75 to 4%. That's going to happen in March of 2025. So markets are now starting to kind of come to the reality that the Federal Reserve is only looking at 3 rate cuts this year, and the markets were pricing in as much as 6 to 7. Now we've come down to 5. There's a possibility the Federal Reserve, maybe we both kind of meet in the middle of 4. But again, a lot of that depends on where inflation and interest rates are going to be, right? So inflation going to be, and that's going to dictate where interest rates are going to be. So the bottom line is that, look, energy is going to be up, in my opinion, for the month of January because that's where the prices were. They were higher. Crude oil was up. Shelter prices, big question mark. We've still got food to show us some signs of a potential pullback. So if you come over to these numbers, this is where the stagnation is coming from, but all items less food and energy continues to make its way lower, down now sub 4%. And the expectations are for us to see it down to 3.7. Food prices have been coming down, so that's good. We're almost in the deflation territory. It's come down from well over 13.5% in August of 22 to now sitting at just over 1.3%. So that's really good. And then if you take a look at shelter prices, so this right here is going to be shelter. Again, rolling over from 8.2% down to 6.2%. So it is starting to roll over very nicely, but still long ways to go from a deflation or proper disinflation at the moment. So a lot of it is going to be hinging on shelter and food prices. And this right here, of course, is the overall inflation. So if I zoom in a little bit, you'll start to see that inflation is indeed leveling off a little bit. So if you zoom in, you'll notice that we are starting to see a little bit of that leveling off since September. That is a good sign. That basically means that, okay, overall prices are indeed starting to level off and come down. That is a sign of true deflation a little bit. And that's exactly what we want to see as consumers, because overall prices have continued to go up. This right here, of course, being the significant increase after the quantitative easing. And the index went from 250s to well over 300s. And it's now starting to level off a little bit. So that's exactly what we want to see for prices to come down. And of course, for that soft landing narrative to finally come into fruition. So my expectations are that inflation could come at a huge, big surprise to the upside, meaning a stronger than expected report, which could lift the markets a little bit higher. But of course, a lot of that depends on shelter and food prices if they cooperate, because I know that energy is going to be higher, but that's still not going to offset the potential increases in shelter and food prices. So that's going to be the big question mark going into tomorrow's inflation numbers. And I will be live to cover the entire event, so feel free to join us. Hope you guys enjoyed this video, find it helpful. Make sure that you drop a like and let me know in the comment section down below, what do you think about inflation numbers for tomorrow's CPI, bright and early at 8:30 a.m. Eastern. We'll be covering the entire thing. Make sure that you do check out the links down below for our Discord and our Patreon. We'd love to have you on board. As always, happy investing. I'll see you all in the next video.